The Rebel Capitalist Show.
One question that I personally have, and I haven't been able to find the answer to, and that's with taxation for American citizens with gold coins. And what I've gathered, and you can correct me if I'm wrong, is that everyone says, oh, they're not taxed because there isn't any disclosure law. But it seems like there's no disclosure law for the dealer, but that doesn't mean that you don't have to report it on your 1040 or whatever your personal tax form is. So how does that work? Let's set the record straight right now.
So I'll start by saying this. You should speak to a tax professional. I'm not a tax professional. I didn't even grow up in the United States. I grew up in Canada, but we do deal with a lot of American clients. So this question comes up quite often, and I'll share with you what I know to be fact. The dealer reporting is really on a state-by-state level. Some states have laws in place that make so that the dealers operating businesses in those states have to report either at a certain threshold or all transactions to the state government.
Okay.
That doesn't necessarily mean that the taxpayer has to do any reporting. It only means that the dealer has to do reporting. As far as I'm aware, precious metals held directly are not necessarily a reportable asset, but if you do realize a capital gain or a capital loss, you have to report that capital gain, or you should report that capital loss on your personal income tax.
That's what I thought.
Okay, so that's
even if it's an American gold coin.
As far as I'm aware, regardless of the product, as long as it's bullion and as long as you have realized a capital gain, you are supposed to report that income, which would then be taxable. At which level it's taxable, I don't know. I can also tell you that precious metals held directly offshore, so this is a big question for a lot of our investors. They say, if I store precious metals with you, do I have to report it? You can go to the IRS's website, and it says clearly that precious metals held directly are non-reportable to the IRS. But again, if you realize a capital gain, you are supposed to report that capital gain. So there's no getting around the capital gains. Bottom line is you should be paying income tax on capital gains on precious metals, as far as I'm aware.
Yeah, if you're an American, I think making it even more confusing, in Europe, there are certain countries where if you buy a coin, if it's considered money, then it's not taxable, and it gets very, very confusing. But we'll just stick with it from an American viewpoint. Why that's important is because so many people think that if gold goes to 10,000 an ounce or 20,000, and I'm the biggest gold bull that's out there, and I suggest everyone own gold. And people watch my videos understand that there's automatically 10% allocation to gold. But if it goes up to, let's say, 10,000, that doesn't necessarily mean that you get rich, because if it just goes up in nominal terms with inflation, and then you go ahead and sell, then you've still got a substantial capital gain. And if it only went up with inflation, you could see this situation where you would actually lose purchasing power if you were to sell, with gold going up to, whatever, 50,000 an ounce. It really doesn't matter. So, and again, I'm an advocate of gold. I think everyone should own it, but I want to make sure that people, if they do own it, they understand exactly what the benefits are and maybe what some of the benefits aren't.
Sure, what some of the benefits aren't. Yeah. If you own gold between 2012 and 2019, you probably would have been scratching your head a little bit and saying to myself, I could be in the stock market making healthier returns than I am in precious metals. Same was true for silver. A lot of silver bugs out there were really disappointed until like the last 3 or 4 weeks, in fact. So if you look at precious metals and you try to compare it to other assets that either pay you dividends or pay you interest, a lot of the time you're going to be disappointed. The key is not to look at precious metals like traditional or like those other asset classes. It really is a standout, and it performs at its very best during times exactly like this. These crises is why you buy precious metals. When we always tell our clients, buy it pre-crisis. So get your 10% pre-crisis while the prices are relatively low, while premiums are relatively low. Because once everybody starts piling into the market, like we're seeing right now, where volumes have gone up about 300% in the last 3 to 4 months, and that's like, it's not a spike, that's an ongoing trend right now in the precious metals industry, which will probably continue. Thing is, you're now paying almost $1,900 an ounce when you factor in your premiums for the physical products, and your premiums are higher than they'd usually be as well. So one of the downsides, like you said, of precious metals is sometimes you just got to kind of eat it and wait for it to do its job. And right now it's doing its job very, very well. And it'll probably continue doing its job very, very well throughout, if this crisis remains kind of throughout an extended period.
Yeah, and I want to be very clear with that line of questioning. What I was getting at, and this is for the viewer, is that I hear a lot of people that are under the assumption that gold capital gains are tax-free, and that's an advantage. And that was my point, that be careful with that one, because most likely those capital gains are not tax-free, even if it's on a gold coin. So I just want to be clear with the audience there. What type of premiums should people expect, and how much do they fluctuate, and why would they fluctuate up or down?
Yeah, it's a good question. I think you have to kind of break gold and silver into, you have to look at them individually in this case, because premiums for gold tend to be a lot lower than silver to begin with. Like if you look at today, which we're in a crisis, so premiums are already higher. So to answer the second part of your question, one of the things that really affects product premiums is obviously market demand. The mints and refineries, picture these companies as big factories. They have a certain amount of output per week, per month, and they have their distributors on set allocations. So when the demand in metals like now surges 200, 300%, these mints are caught off guard. They're like, oh my God, we have to hire more staff. We have to train these guys. We have to buy new equipment, which has to ship in from China, from Germany, wherever the minting presses are being manufactured, and they have to ramp up production. In the meantime, the available inventory in the market of physical metals gets really, really tight, and then you start to see premiums creeping up, which is exactly what's happening right now. So anyways, to answer the first part of the question, gold premiums right now, if you were to buy a 1 ounce gold coin, you'd probably pay retail somewhere around 4 to 5%, somewhere in that ballpark. Where if you contrast that to 1 ounce of silver, you'd probably be paying about 10% and upwards. So when you start, if you're really price sensitive and you're someone who really crunches the numbers, you try to save as much as you can at every turn with your investments, you're probably going to lean towards gold for that reason, or at least maybe a larger percentage of your precious metals portfolio into gold versus silver. Silver, like you said earlier, I think you nailed it on the head. You said silver is more of an investment. It's for me, it's, even though you're paying a higher premium, you can see more volatility in the silver price, and you could realize a shorter term gain in silver than you'll see in gold, which is really your long-term hedge. It's your wealth insurance. It's a cornerstone in your portfolio. I mean, aside from demand, the different things that might impact the premium is the brand of the product that you're purchasing. So for example, if you're purchasing 1 ounce gold or silver eagles from the US Mint, they're the world's #1 selling product. They're in high demand. You're always going to pay a higher premium because they're more expensive coming out of the mint doors versus other competing products. On the other end of that scale, you've got private mints, private refineries. These places operate at a lower overhead, and they'll push out 1 ounce rounds, for 2 or 3% less than what the eagles will cost you. So the brand and demand are really the two things that are going to kind of drive that premium. And obviously, when the market cools off, you're going to start to see premiums fall. You're also going to see buyback prices from dealers fall as well, kind of in tangent as the market cools off, and dealers, are then sitting on inventory during those kind of quiet periods. Whereas today, dealers can't get their hands on enough product to sell.
Okay, yeah, so that's kind of my next question, is the reason that the spread is so high on silver is because the supply-demand imbalance is more extreme than gold right now?
Definitely. Yeah, silver is a really small market. I don't think people realize just how, like, precious metals in general is a small market, and silver is much, much smaller than gold. Not because there's not globally a lot of production. The supply for silver is very steady, in fact, but the demand went from, like I said earlier, 0 miles an hour to 60 within a very, very short period of time. And the mints and the producers need time to catch up to that production to get their products into the marketplace. And they're slowed down by things like COVID, the inability to ship into markets and deliver into markets. For example, in Grand Cayman, we can't get the silver on commercial flights right now to bring it into Cayman because the commercial flights aren't flying as regularly. So all of these things make it so it's harder for investors to get their hands on physical product. We've seen strange things like the premiums on 100-ounce silver bars, which are usually one of the cheapest ways for investors to invest in silver. That premium's actually risen dramatically to a point where it's more expensive to buy a 100-ounce silver bar premium-wise than it is a 1-ounce round right now, because there's just such a demand and a back order of these 100-ounce bar formats. So yeah, to answer your question, it all boils down to extreme mainstream physical demand.